So gold is trying to break higher on the hourly chart. Here's one that I drew earlier, literally, but we had this W formation. White. So the W's tend to see the price pull back in to the neckline, which we've seen already. So that's happened. It's been 61.8. Oh, let me just make sure that's the right, because it's not. I don't think that's the target. So we've had a almost a 61.8 retracement there so far. Now, how long have we got to this close? We've got 9 minutes before the close of this candle. What I like to see, um, right, there's two ways to look at this. If this were to close here or a bit higher, um, call it what you like, hang your man, whatever it is. Um, if you move down to a lower time frame, all that this is really, let's go down to a 1 minute to show you, is essentially a market that's moving back up, right? So what tends to happen is you get a move back into that. So what we could see is a continuation of this lower to fill the wick on the 1 hour chart. So it may happen, may not. I don't know. But it's just something to be aware of. So this wick that's being left, as I said, we've got 8 minutes left, could be filled on the next candle. So we may see that. So we may see another hourly candle moving in lower, and depending on the velocity of the move lower, for instance, if this were to be a very, so let's say this closes up high and we have a really strong candle and a strong close, it closes at or near the low, then the thesis is that this will continue lower based on the momentum in the market heading lower. Okay. Now, so long as the support holds, well, the support could be in here, perhaps, maybe all the way down to the 7.8. So long as this holds, then the thesis is that this market is heading higher. Um, let's put a arrow here. Okay, so now this is based on, let's get rid of all this junk. This is based on this impulse. So we've had a move up. If we pull it out to maybe a 4 hour chart, might be cleaner. There we go. So we've got this impulse here. Impulse correction. It would be expected to be followed by a move up, a continuation. So if we draw that, so I mean I don't know how sophisticated you guys are on this, so I'm just talking basics here. And up. So up we go. In a continuation of the overall bearish conditions in the market, which are bullish. Now we are up into weekly all-time highs. So we might expect there to be plenty of resistance, and this could be a tool to get higher. So a triple top could be put in place. We don't know until we have a break of these highs. So we'll just draw in the high. So there's the support. So what we may see in all of this is resistance and a move back into the trend line over time, over weeks. Anyway, so pull out let's get rid of move back down to a lower time frame and deal with the matter at hand, which is we are in a bull trend and there's little signs of deceleration on the daily chart. We've broken, or we're breaking. Let's have a look. This red line is last month's high, so we're breaking above that. Now, keep in mind that they're going to be investors and traders on higher time frames, such as the daily, such as the weekly, even the 4 hour maybe, that are chasing this move. Okay, breakout traders, and what tends to happen is they get trapped, you get volume building up, and then it plummets back down into all of that length. But just something to bear in mind. But anyway, so we've got this 4 hour impulse, we've got that correction, we've got a 61.8, right? So that's a nice deep retracement, strong bullish impulse here in New York today. So the thesis is bullish still. Target wise, well, we've already talked about the all-time highs, prior high. But if we were to draw our Fibonacci on this correction, you can see that minus 272 is something I like to use. Go back and backtest yourself on these corrections. So you draw the Fibber from the low to the high, and more often than not, these impulse corrections and continuations, they remarkably, they tend to tap into here and start to come off. Maybe sort of 50% of the time. So anyhow, so that's where we're at. So we're looking for a continuation up here. On the hourly, what are we looking like? So that's what we talked about, that W earlier in the video. We're pulling back into that W. So long as this support here around about, give it a round number, 2050 holds up here. Okay. So if we can stay above here, that'll be very bullish. If we have an impulse, if this candle closes in 2 minutes, as it is, and a continuation up, and then on another close, then that would be very bullish. If we start petering down again into here, we're looking for a support in and around 45. The volume point of control, if I zoom in, you can see that that's the volume point of control for the day. That red line, right? High volumes here. So this is support. So if this were to hold, then the thesis is building for a move higher towards the targets that we talked about earlier. So bear in mind that last month's highs are here. So if we close above last month's highs, 48.50, that sort of area on this candle, which we're about to probably, and we get another candle that bursts higher, then that's going to be very bullish, isn't it? So in terms of entry, you can do that on a lower time frame. You want to see bullish structure, something to lean against. You stop below for a possibility of a good trade up. Now, in the session today, then, so we've got this pump up. The other way of looking at this is that, well, you've got length here, you've traders in the money. The market doesn't like to leave traders in the money for too long, so you could be building a thesis here that we've got this M formation, it's a peak formation. It's the 5-minute chart. Move up into the peak formation before the blow off down, and that will play into what I was talking about earlier. That candle is now closed with a long wick below, so let's get rid of all these markings. So you've got all of that volume here for the market to dump back into. So you could be building your thesis that before this heads higher, you could be looking for your scalp into here. So you've got all of this volume up here, breakout traders that are trying to buy, that are trapped, so the market's moved away out of those, they're coming back up, and more length has been built to move into again. We're breaking that trend line now. We've got, let's say the structure is here. So give that a green to show that it's support. So on a break of this structure, you're looking for an entry to come lower. But the overall thesis is bullish on a longer term outlook.